Today, we're going to be talking about KPIs. Those are key performance indicators. For some of you, these three letters are very familiar, and you probably use them in everyday life somehow in your business. For others, they mean little or nothing. You might also know them as metrics. These are the specific numbers that the owner of a company or the CEO or the chief financial officer or even general managers might use in order to see how the company is doing. And then they check those KPIs, and eventually they might make corrections in order to get the KPIs to where they need to be. This is Randy Kirk, and today we're going to be talking about those kinds of issues. If those are important to you with regard to Tesla, hit the like button so that I know to do more videos like this. And then I'd also encourage you to look down in the information below and see the programs that are coming up, which may cause you to subscribe, and then hit the notify button so you'll become aware of all of those programs. This afternoon, we're going to have a post-game show after this pre-game show, and we're going to talk about whether the KPIs were met, what expectations I had that were met or missed, and what things we still might like to know down the road. So maybe you want to hit the notification button just to be here for this afternoon's show. And then, of course, join Patreon. I could use some help with regard to financing what we're doing here. Okay. I don't know the source of the quote, but a wise industry leader, and it might have even been Warren Buffett, said that if he had 7 KPIs, key performance indicators, or metrics on any given company, he could run it from a beach in Maui. I totally agree. I could run a business with 7 KPIs. There's no doubt about it. But the key is deciding which KPIs for any given company are the important ones at any given time, because they can change as time goes on. Saying that there are 5 or 7 or 10 KPIs that really matter does not suggest that there aren't 10 or 20 or 30 other important KPIs in any given business, but they don't rise to the same status as the 7 that we're talking about that basically would allow you to run a business. All right. And so we're going to look at those for Tesla. And the ones that I'll be looking at on the earnings call, maybe these are ones, maybe this will be a help to you to understand what to look for as a stockholder or as a potential stockholder, or just somebody that enjoys watching the company. So let's go down my top 7 that I'll be looking for this afternoon in the earnings call. First of all, Zach Kirkhorn, the finance chief, specifically told us that with Tesla, their number 1 KPI is operating margins. That's what he said. Okay. He told us, watch the operating margins. That tells me that that's what they're looking at as the way that they're going to measure their success or failure as a company. Now, operating margins, again, let me just explain. Operating margins are when you take all of the profits, the gross profits from every different division, and you add those up, and then you subtract the overhead. That is your operating result. You divide that into the you divide that by the total revenues, and that gives you your operating margin. So the operating margin says this is how well the company is being managed. This is how the company is performing. It is the best measure to determine performance. Now, there are times when that automotive margin, in Tesla's case, might be more important than the operating margin. There are times when maybe the energy margins would be more important. There are times when the total number of vehicles sold might be the most important. But right now, Zach is telling us for them, number 1 is operating margin. Now, I'm suggesting there's 3 reasons why that would be true. Other parts of the business besides automotive are now beginning to provide substantial earnings, more than just a rounding error. And some losing divisions like solar may be losing less, or maybe even to the point of profitability. So where the automotive margins were overwhelmingly what the company was about, which is why the street paid so much attention to automotive margins, that is going to be less and less true starting now. Okay. It's why Zach said, watch them now, and hasn't said it last year or the year before. It's because number 1, earnings from other divisions are going to start to be important. Number 2, Tesla auto margins were huge in 2022, and you can't sustain those in 2023. You're just not going to do it because conditions in 2023 allowed Tesla to raise their prices and raise their prices and raise their prices. And they're not going to be able to do that in 2023. Moreover, they're lowering their prices because the conditions on the ground are different. They're adding way more cars to the total capacity in 2023 than they did in 2022 as a percentage basis, as well as an overall numerical basis. And they're also in a recession with high interest rates. So all those things are going to contribute to the fact that they wouldn't ever. This would not be a time when you'd expect the automotive margins to continue to be where they were, are certainly not higher. He also told us that there would be an emphasis on keeping the overhead low, which contributes to higher operating margins. So again, he's giving you very specific. He's saying, look, my job, one of my major jobs this year is going to be to make sure we keep the overhead low. I'm guessing, again, as an absolute number, but most importantly, as a percentage of all revenues. So that'll be interesting to look at. We'll talk about that in a minute. So longer term, and as more of these other divisions will be contributing to earnings on a substantial basis, then this operating margin will become more and more important. In particular, we'll want to look at energy. That's going to be the number one for this quarter and probably next quarter and maybe even the third quarter. Semi-trucks, which I differentiate from the rest of auto and light trucks because semi-trucks is really a completely different world and might be as large as the automotive division eventually. And so that would be another category that is going to be coming on strong. And then those would be two that I would watch right away. But then eventually we're going to be looking at solar might start to pick up into something significant, although as I've said in another video, that's probably not going to be true. And then we'll have others like little ones, like things that are robotic that are going to start contributing in a major way. The third KPI that I'll be interested in is the tax benefits from the Inventory Reduction Act, which is weirdly titled. We'll just call it the IRA. The IRA is going to make some contribution in the first quarter. We don't know how much, but we should get a hint as to what the percentage of revenues it is. Maybe there will be some guidance with regard to how much Tesla expects it to be over the course of the rest of this year and even into 2024, because it's going to be a curve like this. As Tesla makes more and more of their own batteries, they're going to be able to take more and more of this credit, and it's going to become substantial. It's going to become in the billions of dollars. So that's going to be another metric I'm going to be looking at. I don't think a lot of folks, these are different metrics that you're going to hear from other people, okay? These are metrics that I'm going to be looking at as somebody who owned a manufacturing company for 29 years. Number 4, which some people are going to think this is number 1, and that is a lot of people, the first thing they want to see is earnings per share. I'm estimating it'll be $1.08. I'll be very happy with anything over 70 cents. The street is saying 84, I think, or 85. A few other people are like me, they're over $1. Anything over $1 should move the market. But for me, earnings per share is number 4 on the list. It's just not going to be that interesting to me in the first quarter. Yes, it'll be useful. It'll also give us some directional understanding so that we can make some predictions better about second, third, and fourth quarter. But as far as this 1 quarter number, I think it's going to have a lot of moving elements in terms of cost of goods for automotive, in terms of ramps for various things like semi. So I think it's going to be really hard to come up with an earnings per share number that is going to be indicative of what the stock is worth right now. But anyway, if it's over $1, I'm going to say that's really good. Number 5, for others, this will be number 2 on their list, and that will be automotive margins. I'm estimating 23%. That's probably very optimistic. But again, all these moving parts, I did an entire video where I talked about 7 different moving parts. And since then, I did a video yesterday afternoon that you can go back and take a look at with Herbert of Brighter with Herbert. And he talked about some ones that were not even on my list. So there's a lot of moving factors with regard to cost of goods sold, the cost of raw materials, with regard to the mix of the vehicles that are being sold, with regard to the ramps at the factories, and the fact that that's going to mean cost reductions because they're making way more vehicles. So many moving things right now. I think it's a little hard to guess where the margins are going to come in. Now, Zach promised us it wouldn't go under 20%. Even if it does, if it goes to 18%, it would still be like the highest automotive margins of any company in the automotive business, I think, except Lamborghini or somebody. But they'll be off the charts, better than any mass market automotive company. I'm saying anything over 18% is a win. If it's over 20%, Zach's right. If it's over 22%, the street should be shouting hallelujah. And if I hit my number 23, I'll just be able to go, yeah, I got it right. Okay. So after that, number 6 will be the ASP, or the average selling price. Now, this is one that's people are so confused by this, and the street doesn't do any significant analysis on this. This is sad. So they say, well, last year it was $50,000 a car. Tesla has taken 20% cuts, so therefore it should be about $40,000 a car. Well, that's nonsense. The shift alone, just the shift in the percentage of cars that are going to be Model Ys compared to Model 3s, dramatically increases the ASP. So, but for the fact of these reduced prices, we might have seen the ASP go to 52 or 53. So I'm sitting at 44. Other people are sitting at 47. Some people are as low as 40. I'll certainly take 47. If you take my 47 and you also take my 23, the beat is going to be so big that the stock will immediately respond. I think those two numbers are somewhere in between, and we'll just see where everything turns out. All right, number 7. So we talked about, Zach, that overhead is a priority. So therefore, I want to see what the overhead number is and what that is as a percentage of total revenues. Okay, that's 7. There's my 7. I think that if I were Tesla and I was the CFO of Zach, I could get down to Hawaii. I could look on my computer every morning, take a look at those 7, and I could probably run the company. Okay, so you might have your own list. I'd love to hear in the comments. Please, now I'm not done yet. Stick around. Don't leave, because we're going to talk about the call. Got to talk about the call too. The call is where it happens. I should have said that in the beginning. The stock might move as a result of the report coming out, but what really happens is when the call happens and people start responding to all the information in the call. So please, let's talk about the call for a minute. Okay, the stock right now is going to do what it's going to do. It has been trading sideways. It has been in a range for a very long time. I get kudos for this. I predicted that Tesla will be trading in a range for a very long time. I think it'll be trading in a range for as long as there's confusion in the marketplace with regard to where the overall economy is going. And so, of course, all the other trading factors, the bonds and the stocks and gold and everything is trading in range. About the only thing that's not trading in range is crypto. But everything else is in this range. Well, commodities have dropped dramatically. So there's this range-bound situation because nobody can figure out, are we going into recession, soft landing, hard landing? Are we going to miss a recession altogether? When does the bull start? Everybody's confused. And that's when you end up trading in a range. But there's also no real fear out there. So we haven't had a fall off the cliff. There's not a substantial drumbeat that we're going to have a hard landing or that there's something in the world that's going to cause a devastating crash. So I think that, as I mentioned earlier, anything over $1 will start moving us toward that $300 number this year that I've predicted. And that'll happen between now and the third quarter. If the second quarter results are good, we'll start moving towards 400. And if the third quarter results are good, which I think they will be, I think second and third, they're in the bag. We already know what those results are going to be. They're going to be great. We will move towards 400 by the end of the year. Okay, that's my numbers. All right, now let's talk about the call. First of all, I'm going to be listening for a recommitment to maintaining over 20% margins or even something better than that going forward. Again, I don't care if it drops to 18, that'd be fine, but I just like the recommitment to staying over 20. If they come in at 22 or 23, you won't even need that in the call. It won't be necessary, but it would be good to have that recommitment. Number 2, I'd love a restatement of expected shipments, not 1.8 million. I'd like them to move that up to 2 million. It is ludicrous to talk about 1.8 million. They would literally have to stop production in some of the plants and just say, everybody go home in order to get down to 1.8 million. It's just no way you can do it. I've done several videos on that. I'm not the only one. Other people have done similar videos. I've had guests on my show. We all look at those numbers and go, how can they do less than 2.2 million unless they stop production? Now, I did have one commenter. This is why I love your comments. I did have one commenter that said, well, if they're going to shut down Model 3 lines for a substantial amount of time in order to switch over to Highland, that could result in, 50 or 100,000 less cars. That would be a lot given the current volumes of the Model 3. So they have to shut them down for quite a while to get those numbers. So, okay, maybe it's 21.5, but no, you'd have to send home shifts, or you'd have to completely close down to get down to anything under 2.2 this year. All right. So I'd love to have a recommitment that says, no, it's really 2 million, so that we're seeing something reasonable. We don't have to talk about that anymore. Okay. I'd love to hear some news on Highland. Is it a thing? Is it going to happen? I know they're trying not to say anything because they don't want to have the Osborne effect where people hold off on their purchases of Model 3 because they want to get the Highland when it comes out. I'm sure that's why they're not talking about it. So probably not going to hear anything about it, but it'd be nice if we heard something about it. Number 4, anything on energy in terms of margins. They don't have to say it's 40% or 45. It would be nice to say higher than automotive. There you go. There's a nice broad number, but something. I'd love to hear what they think margins will really be. They just told us on cars over 20%. How about telling us on energy storage it's over 40%? That'd be great. Love to hear that. Number 5, an Optimus update. This is very unlikely. But you know me, I'm the optimist, and I want to hear about Optimus, and I want to hear if they're going to start, are they going to have an AID3? Are they going to do a reveal? Are they going to start selling them? None of that's going to be on this earnings call. They're not going to tell us any of that, but I can have a little hopium in my heart. All right. Number 6, a semi update. Semi trucks are not rolling out at anything like the levels that everybody was expecting at this point. I was expecting 50 or 100 a week. It's not even close to that. Elon has said 50,000 in 2024. Could we have a reevaluation of that? Are we going to see 50 or 100 a week this year? Are we going to see, still talking about 50,000 next year, maybe even a little bit of nuance or a little bit of understanding with regard to how that happens? Is the line under construction now in Sparks in a part of the factory that already exists, and the expansion will just give them the room to be able to do everything? I mean, help us out here. How do we get to 50,000 in 2024? And then it'd be nice if there were no negatives in the earnings report. That'd be nice. Oh, number 8. I almost forgot this one. Everybody and their third cousin, maybe it's number 1 for a lot of people, is just some more direction with regard to the battery ramp. Where do we think it goes to 100% at Giga Texas? Are we looking at end of the year? Are we looking in halfway through 2024? When do we think the energy ramp gets fully out there? Obviously, you all want to know when FSD will be running full out, when we'll be able to sit in the back seat. By the way, I had another commenter that said he's got a new way of describing the different levels of capability with FSD. He would say steering wheel and no steering wheel. So SW and NSW. So anyway, love to hear Elon's latest prediction. I've asked the question a slightly different way. That is there anything standing in the way of FSD that will not be resolved by just more and more data and more compute? Is there any kind of something in the road, something in the way of getting it fully accomplished that he could talk about? Maybe there isn't, he can't talk about it. But anyway, those would be the things I'm looking for in the earnings call. Tell me in your comments, what are you looking for in the earnings call? Is there something that you'd like to hear an answer to, something you'd like to see them discuss in the earnings call? So with all that said, I'm hoping that what I'm doing here is different than what other people are doing. I'm hoping that there were things on my lists that you're not hearing every third YouTuber say. If that's true, would you hit the like button? and then maybe subscribe, and then maybe hit notify, and then go down below and take a look at these shows that are coming up over the next couple of days. Oh my gosh, I've got a schedule all the way through Sunday. You can take a look and see what I'm doing all the way through Sunday. You can hit notify, and you'll hear about all those as they come up. And then it does cost money to do this channel. And I will tell you that I finally gotten to the place where there's enough income from the channel to be able to pay my people in the Philippines. So I'm breaking even. So if there's any chance that you could afford $5 or $10 a month, would you please join my Patreon? Okay, that's it for today, and it's been great talking to you.